Hi, good day to you, ladies and gentlemen. It's another beautiful edition of this week, looking at the market outlook for the week and spotting the opportunities we have as well. Last week was a fantastic one. Some of the currency pairs we analyzed played out as we analyzed it, and some did not get to where we were expecting them to get to, so we couldn't join the trade. And as you know, trading is more of waiting than executing. So starting this week on a very grand break note, from the February 23rd to March 1st, let's see the opportunities we have in the markets from the Monday 24th of this month till the 28th of February. Let's look at what we have. From the fundamental outlook of the business, from the Forest Factory, I focus on the high impact news. And starting that on Monday, all day is about Japanese yen having a bank holiday. So the market might actually be slow if you're trading GPY pairs. And of course, it could be shocking. It could actually still move a little bit. But ideally, I do not expect much activity on bank holidays. On Tuesday, 4 p.m. Nigerian time, US dollar is coming up with CV consumer confidence, and this is expected to be volatile. On Wednesday, we do not have much as well. By 1:30 a.m. Nigerian time, Australian dollar is coming out with a CPI, and this is also our impact news, which the forecast is up 2.6%, while the previous was 2.5%. Expecting that little big change and shift in that market paradigm, so we can see more outlook on it. I'm looking at the Thursday, 27th of February, 2:30 p.m. Nigerian time. We have the US dollar coming up with the high impact news on the prelim GDP and unemployment claims on Friday, which is also the other big day of the week. So virtually we have the Thursday and the Friday has the biggest day of the week, days of fundamental. And on Friday we have all day on Euro having German prelim CPI, and 2:30 p.m. Nigerian time, Canadian dollar and US dollar are GDP and core PCE price index consecutively. These are the outlooks of the fundamentals that we have for this week. And let's shoot in straight into the business of the week on the technical outlook. Starting with the DXY as usual, because we check the currency pairs that are US dollar attached and gold, of course. Let's start with DXY so we can find opportunities right there. On the XY monthly time frame, we've seen that this month of February has been a very bearish one. And from the outlook we had even last week, we're expecting that to get into this range because that is the only liquidity range that is visible right here on the chart. And for that, we're expecting movements into downward direction before we experience more buy on the XY. So how does that look? How many pips will that be? When you check that, that's not too much in markets. We only expect the market to give us a little bit of sell momentum into this range. And that is one. And this is on the monthly time frame. So now let's check out what we have on the weekly. On weekly, we have the opportunity to see that the market is still within that range where we had that gap, where we experienced that gap. We expect the market to take out this level of this candlestick at 105.117, and we expect the market to move into this range before we have change in that direction. So basically, on monthly and weekly time frame, my bias is bearish on DXY. And going to 4 hour time, sorry, going to daily time frame now, before 4 hours. Going to daily time frame, does it look more like this is still what I'm expecting? Yes, of course, it is exactly what I'm still expecting. My bias remain bearish. But on daily time frame, I have a little bit of shift here, which is the fair value gap or imbalance on the daily time frame between Wednesday and Friday of the week, because Thursday was a very volatile one, which broke through the previous low price level with this massive bearish candle. And of course, this has actually tricked some traders to jump on a sell for DXY, which is a buy on Euro US dollar for Friday, and this shocking event happened. But however, that is market for you, expect the unexpected, and we can also still wait for the daily of Monday or Tuesday to do something like this into this range before we find that balance into that range. So expecting a bit of buy to fill this imbalance level on daily time frame. Then from there, we expect the market to move into the fair value gap of the monthly time frame that we are expecting. And this is the outlook, and this is how it looks like exactly on the daily time frame. Let's go to the 4 hour time frame and let's cap it all there. On 4 time frame, we have something like this, which is also essential. This was the last load I was taking out in the market. So from this swing to this swing, this is about 50% of it. And at the same time, it was at the level where we had a fair value gap, which makes it we justify it as a level where liquidity can be grabbed. And of course, it did with these two candlestick formation pattern that you're looking at right here. this and this, you can see that this is a bearish engulfing candle, and it formed at an area of value. And what we can say about that is the market actually had all the reason to move downward in that perspective. And of course, when we go into that and we want to break it down or to go into details of exactly what the principle is all about, it's still the same thing we're experiencing here. Between this candle right here and this candle right here, we had another imbalance, which the market has actually created a gap to, and it has actually moved within that range, and currently it's still there. So what I'll be expecting is to still see the market doing more of bearish momentum, because it's already within a range that I'm expecting. So on daily, don't forget, we had a level on daily time frame, which is at this range, right? And on 4-hour time frame, we had another level where the market is right now. So this is also giving us a bearish bias. Now, that is on DXY for this week. Let's go to the Euro US dollar. Let's see what we have there. Last week, this was the expectation on Euro US dollar, expecting of this to happen, and it actually to move and play this low. But fortunately or fortunately, the market didn't get there, and it did a little bit of movement, of course. That was from 13 to 21st thereabouts. Look at this. So our analysis on Euro US dollar actually played out well, and it moved just like we analyzed, but then it didn't give all the profits to the table. But then if you had traded this last week with me, I think you would have made some profit over this Euro US dollar. So let's start this month. Let's start this week on a new note. So let's forget about the past glory. So on the monthly time frame, this is tending to be a bullish momentum, as you can see on the monthly time frame. After the liquidity was grabbed with doji candlestick last month, which was January of the 2025, February has turned out to be a bullish one for Euro US dollar monthly time frame. And what we can see with that is that the market actually created a shift and broke towards the low price level here. So this low was taken out completely in the market, and this fair value gap that we had there before all of this bullish momentum and ranging happened, the market moved back into that range right here with this candle, and now it's pulling out. And of course, what has happened there is expected to happen again, because that is another level where the market tends to move into, because liquidity is what we deal with in the market. So ideally, still expecting Euro US dollar to still buy into a range like this before we have more bearish opportunity or more bullish opportunity. But ideally, I'll be expecting Euro US dollar to still move into this range, no matter what. Euro US dollar to move into this range of 1.0723 on average, and that is on the monthly time frame. And when you calculate that from the current market price, that's about 300 pips or 280 pips on average. And let's go to the lower time frame, which is the weekly, and let's see the opportunity that we have in there. So on the weekly time frame, look at this. We do not have any opportunity in the market to expect more sell per se, because last week was not really giving as much as expected. The previous week was a bullish momentum, which made a lot of traders to anticipate more buy for last week. But one thing about the market is you may know why, you may know where the market is going, but you won't know when the market will actually move. So last week is one of those times that you think the market may actually move, but the market did not move. So the movement could be this week. Of course, you can expect the market to still be bullish, because I expect bullish, and I'm believing that it will still be bullish in a way. Okay, so last week was not really a bullish momentum signal for this week on Euro US dollar, but ideally the candlestick that came through for last week is just to still tell you that the bulls are still in control, because the sell momentum was not huge and it wasn't massive as expected. So basically, when you look at this chart right here, when you look at this, you still see that we have a trend line liquidity above all of this range, and we have a proper liquidity structure that is found on the weekly time frame. You know, this is the fair value gap on the monthly time frame that we had there, and where we're expecting the market to move into. And of course, on the weekly time frame, we have something similar, like within this price range to this price range right there. Okay, so this has already been mitigated, but we can expect market is to move in, because our time frame really controls what happens in this space. Okay, so that's by the way. And let's go to the daily time frame. Let's see the opportunity we have in there. So I'm going to take out some of these guys. Oh, they don't look so choppy on the chart. Right here, we have the opportunity to see more buy momentum. So on the daily time frame, do we have any reason to short, or we just have to long immediately we see the market opening? Well, with what the market is showing right now, we have a bearish momentum candlestick for Friday, and we do not have much liquidity zone at a discounted price level like we expected. So all we can see is this high to be taken out in the market. And of course, if this happens, we'll be waiting for the market to take out the high and move into the higher time frame range, which is the monthly time frame imbalance. And this is the expectation and anticipation on Euro US dollar as the chart speaks now. Okay, by going by the interpretation of the chart now, this is what I am saying. So the market has done a bit of movement, it has done that choppiness and all of that. So I was expecting the market to break this high and move into this range for this week. And on 4-hour time frame, let's see what we have. Euro US dollar has not really done much, given much more spaces for we to see where to go to on a lower time frame. But of course, on 4-hour time frame, let's see what we have. On 4-hour time frame, you see, we have a complete range price in here. We have a complete range price. The moment I saw this candle on that day, this bullish one particularly, I told someone, I said, I am expecting the market to go bullish and bearish to cover up this, because that's the only thing we would have as a fair value gap in there. So the imbalance that we have in all of this price range has been filled in the market. So basically, the ideal thing is we still be expecting a bullish momentum on Euro US dollar. And that is it for the week. And going to the Great Britain pounds USD, last week it moved as we anticipated, because we anticipated the market would come to this price range. As a matter of fact, we expected that it's going to grab liquidity below it, but the market did not go below it to grab liquidity. It came just around it to grab the liquidity, and it moved on like that. So for this week, let's see what we have in the market. Let's focus on the opportunity for the week. Just like the Euro US dollar, except that this is showing more bullish momentum right here on the Euro US, on the Great Britain pounds USD. And from the look of things on the monthly time frame, we have about 217 pips to the closest fair value gap above the price level. And currently the month is bullish for Great Britain pounds US dollar, and we can go to weekly to check out what the market is saying. And the previous week was bullish, the last week was bullish, and what we can expect for this week is also to see more bullish momentum in the market. So ideally, if we're going to experience anything at all, I will be anticipating a bit of sell in the market for what I'm seeing here. Look at this, between this week and this week, there's a little fair value gap in there. But the only thing is, will I be expecting the market to do about 82 pips sell before it do a buy? Yes, of course, that's not too much. The market do a little bit of sell before it do a buy. That is not too much. Okay, so basically that is what I'm expecting on Great Britain pounds US dollar weekly time frame. But however, this may not take exactly this shape, but a retracement into a sell direction is essential, and it's what I'm anticipating to see. But let's go to the daily time frame, and let's further see that. So on the daily time frame, since this high has been taken out in the market, it has been grabbed and it has been tested. The market has created another high level above it. And currently the market is sitting duck at this price level. And what exactly are we still expecting in this market is to see the buy momentum in the market. Looking at this, look at this carefully. Can you see that? So what I can say is I'm seeing a buy opportunity. Look at this. We have this chopping movement right here. Grab liquidity, moved away. We have the liquidity grabbed again at this price level, moved away. We have the liquidity grabbed again. And what we can see is it's grabbing this in a momentum in an ascending direction, like creating higher highs and higher lows, which is an energy for an uptrend. And with what we've seen here, it means we're expecting a buy momentum overall on Great Britain pounds US dollar for this week. So if at all, if the market retraces back into this range, yes, it's expected, and we can also wait to trade a buy from this price level 1.2557. Or if we can look at something more clearer right here, there's a fair value gap at this price level, but I won't be expecting the market to get there. I will not be expecting the market to get there. So I will be expecting the market to rather get here as my first entry. And this is where we're checking out on a buy momentum on Great Britain pounds US dollar to this price level. And if that works out just like that, that's about over 250 pips for the week. And it's quite impressive. It's quite nice. Okay. So basically, I'll be expecting at least this level to be taken out in the market for the intraday traders, in case you cannot wait so long on the market to do all of this. Basically, you can still wait for the market to do a buy from this price level to this price level, which is about 150, 170 pips, or let the buy comes to this price level. You click on your buy and you buy to the top of this candle. That also matters a lot. So your profit target is essential, and what you can afford to risk is also essential. This is forex trading. Okay. And a 4-hour time frame, what do we have? Let's check it out. 4-hour time frame, we have some choppy business candlesticks in the business. They've been creating lower lows and lower highs in a channel like that. And basically, I'll be expecting them to move somehow and create a balance to this price level here. I'll be expecting them to stay at this low price level. So let me take this out. So everything we have from this price range to this price range, this high was taken out completely in the market, and we can tell that the market has done a great deal of bullish momentum in this range. And basically, this is a retracement that we expecting to see in the market. So if we're seeing the market moving this way, coming back into this range, it is a very good one for us. We can expect the market to come into a range like this, and then just pick up a buy. This is on a lower time frame perspective. This is a lower resolution compared to what we have seen before because we came to a lower time frame. So the time frame we had determines our entry and our exit in the market. Okay, that is on Great Britain pounds US dollar. It's actually still a bullish momentum on higher time frame. Overall, is bullish momentum. We may have about 80 pips downward momentum, which is a sell before we experience the buy momentum. Okay, let's go straight to the AUD US dollar for the week. On the monthly time frame, we anticipated to see more bullish momentum. Okay, this is still on a bullish momentum on higher time frame like this. Look at this. This is still a higher moment, a buy momentum, a bullish momentum on AUD US dollar, and we expect more movement on this guy. And let's go to the weekly time frame. At least as it is, there is no single momentum of a bearish energy for this month on this guy. So AUD US dollar remains bullish on higher time frame, and we can expect that to go to a level like this. You can expect that to go to a level like this. You can expect that to go to this level at 1.65307, 0.6525 rather. Okay, we can still expect more bullish momentum to get into this price range because this is just the market. Okay, it's not what we feel in the market, it's what we see. And going to the weekly time frame, therefore, we saw that last week was a bullish one. The previous week was a bullish one. Last week was not much of a bullish momentum for AUD US dollar. And looking back in price, has it created any price level where we can grab liquidity for a buy or a sell? Looking for a discounted price level opportunity to pick up a buy? No, nothing has happened there. Okay, apart from that, when we check on a weekly time frame like this, we're looking at a price level like this, which is a fair value gap in the market. So we can expect the market to come here to fill it and move straight back up into this range. And that sell is not too small. It's a little bit of about 55 pips on the range. And we can expect the market to do that before it buys up on the weekly outlook. And going to the daily to further see the opportunity clearer. Let's see that here. Let's see. So to further see that clearer, we can also look at this from this perspective that the market has created a swing momentum from this price range and grab liquidity with this candle. It has done a bit of movement. The previous high we had has been broken completely in the market. And looking at that from that perspective, we only have the opportunity to see more reaction in the market. So that's why Monday is essential for us to see what the market will play out so can determine exactly how we want to move more specifically in the week. But however, I'll be going with that higher time frame analysis, expecting more sell into this range before I take a buy on AUD US dollar. And going to the 4-hour time frame, therefore, we have the opportunity to see the market taking out this high, just like we've seen that on a lower time frame. And when we look at this, ideally when we look at this is another block level we can look out for right here. Look at this. So I'm going to mark this. This is how I'm going to mark it eventually. So expecting the market to come into this range and do the thing. So what is that? Expecting it to take out this when it's ready to buy. That's just what I'm saying. So if it's going to do that sell, yes, of course, it will be about how many pips I'm coming? About 26 pips or more. Within 26 pips, if you're trading on based on daily time frame, or intraday opportunities, or you're not ready to swing, this is still a very good spot for you as your point of interest one. And the second one is the point of interest two. To pick specific price level there, all you need to do is to mark the middle, which is the threshold, the half of this range. If from here to here, this would be the half momentum, right? This would be the half. It will be the half of this range, 0.6337. Okay, so this is how we go with the outlook, and I hope you understand. I hope you try. I hope you practice. I hope you put in the energy, and that is how you'll be successful as a trader. So going to the USD card, looking at what this guy is saying, I'm seeing more sell opportunity on this guy. So last week was anticipated to see more momentum into this range, and from this range we'll be seeing more sell. Actually, it went into the range, it sold a little bit, but it's back into the range now, which is not expected. But then it is what it is in the market. But if it's not creating higher high to where we had the previous range, then the sell is still imminent. So which means my bias for last week on USD card remains the same as bearish momentum. However, let's start this week on a new fresh note. We have the monthly time frame here, and from what we've seen, there is a level that we're looking at in the market. Let me just take out this all of this guy. Okay, there's a level I'm looking at for this month. This is a massive bearish momentum candle. This is a total engulfing, bearish engulfing. In fact, this may even ride into next month, continue with the sell opportunity in the market. And where would that be? Looking at the market critically, you see it at this price level. The market still have, the USD card still have about 500 pips on average into this range, which makes it an understandable market that for the whole of next month, we may still experience a bit of sell into this range. So basically, it's a sell dominantly in the market. The USD card remains a sell bias for me in the market till now. And basically on weekly time frame, the previous week was a sell, last week was a buy for USD card. And looking at that, we had a little opportunity on the weekly time frame, which is above here. The market has not filled that zone, which I'll be expecting the market to do that this week, do something like this and cover up to take out this low. Okay, eventually I'm expecting this low to be taken out. So this may not be next week, or it may not be this week rather. Can you see? I'm expecting this to happen. I'm expecting this low to be taken out in the market. But if the market is going to sell and do that, that will be about 330 pips. Actually, it is possible, but there's not much engagement on card for the month, for the week. There's no really heavy one like that. But of course, ideally, I'll be expecting at least this level to be taken out for this week on USD card. This level to be taken out on USD card for this week, and that is 1.4097. And if the market will buy to this level before you take that sell, yes, that will give you about 170 pips or 150 pips on average, which is still not bad for the week on one currency pair. Okay, basically this is the outlook on the weekly time frame on USD card. Going to the daily time frame, let's see the opportunity we have in there. Let's see what we can have ourselves for the week on daily time frame. So daily time frame 2 is creating an opportunity. We had one anchor candle rather, which broke and sponsored the entire break of these lows right here. And when the market created that, I said to somebody after seeing this candle that the market will fill up back into this range. And with that, you see the market has done almost all of that. Okay, you see the market filling that same range. But ideally, I'll still be expecting the market to move a bit of buy into this range, and did exactly what we've anticipated in the market. So one thing about the market is to spot where opportunities reside, where liquidity resides. So if I'm going to sell based on this outlook, well, I'll be selling into this price range here, which is about 150, 149 pips on average as well. Can you see that? So basically, this is what I'll be expecting on this outlook for the week. So this week, expecting US dollar card to go a little bit bullish into this range. And when it's done, it shows a reversal candlestick formation pattern, and selling it down into this range is what my outlook and bias is on USD card for the week. And going to the gold, okay, let me go back to the USD card. I think I still have 4 hours to talk about. Basically, there's nothing much there to talk about because the outlook was there on the daily. So on 4 hours time frame, it will just only be that we have more clarity on what we may expect. So as someone you say, don't leave any money on the table in the market. But well, it is what it is in the market. Right here, we have a fair value gap there. Okay, and if we're going to follow that in the market, that means we can expect the market to pull back at the opening of the market, or that is if there's not even a gap down into this range already, then for the market to do this, then to go back into sell. Do you understand? So I think something like this is very possible for us to see as well in the market. Can you see that? So this is where we're looking for a buy or a sell opportunity before, expecting a sell opportunity from here in the market. So With this, it means we may expect a little bit of sell, which is the fair value gap that you've seen here. Market can come in to cover up for this before going into this price range. Before now, you see the sell into this range. Can you see that? So ideally, this may also happen in the market because this is another fair value gap level, and this is a 4-hour time frame. We cannot pretend we're not seeing it. It's right there, sitting, looking at us. All right. Okay, that is on USDCAD. And let's go to the last guy for the day. This is the gold. And last week we anticipated gold to grab liquidity from this price level and fill this level and probably break the previous low structure before moving back up there. But no, it didn't happen that way. So we had no reason to actually jump onto this trade. And let's go to the monthly time frame to start with. Gold has been bullish for quite some months now, and it's massive. To me, my bias on gold is still very much bullish because that's exactly what it is showing. Also, if it's showing a buy momentum, I have no business selling it. Okay. And the buy on the weekly has taken so much momentum. 1, 2, 3, 4, 5, 6, about 8 to 9 weeks now. It's been buying massively in the market. And when you look at where the fair value gap or imbalance reside, it's quite a huge price level, which looks like impossible for the market to go back there to retest before any bullish momentum will happen again. Can you see taking out this high, creating this above here, creating all-time high? Do we expect gold to move back into this range before it continues to buy and break its own high? I doubt so, but it looks like what we should expect, but I doubt so. The gold doesn't really retrace that much. It doesn't do all of those 50% or 38% most of the time. It doesn't do that. So let's go to the daily time frame because my bias on this guy is still much of bullish momentum. Actually, it's still much bullish momentum. And ideally, when we have something like this is just a sequence for a reversal actually on a daily time frame on what we've seen of gold. We've seen the liquidity has been grabbed, forming a spinning top right here, more or less a struggling candle like a doji. And you can see that the next candle took out that high and it retraced back above it. Then the next candle was unable to take out that previous high, but still closed below the opening price of the previous candle right here. So now we have these three guys sitting here. This is basically something in forex market. When you see the market move and do all of that, everything is doing right here. When you see this happening here, basically the market looks like more it wants to retrace before it go back to break the all-time high. All right, so right here now is the all-time high for gold, and where the market is right now looking like it's going to do a bit of sell and it will move. But then let's see what we have with that opportunity. Let's see what we should expect, because that is one thing with the market. If that will happen, then I'll be looking at a price point where I can say the market may likely get to, because now this is looking trickish. This is here. So I will be waiting that if gold will do any reasonable retracement within this price range, then it should be to this price level before it takes off again for a bullish momentum right there. So this is the outlook on gold for the daily time frame. And getting to the 4 hours, let's see what we have on 4 time frame. It's still the same. The energy is the same on 4 hours. It's very, very choppy right here. It's leaving us with two options that when the market comes here to take out this high, we can see sell momentum and continue. But for me, I'll be taking buy on gold currently. Is there any opportunity that comes to a discounted price level that I'm seeing, I will shoot a buy on it. It's better for me that way, all right? Because it's very, very bullish right here. And on 1 hour time frame, let's see what we have. It's still very, very choppy on 1 hour time frame. Very, very choppy on 1 hour time frame. Ideally, look at this. Ideally, it has created a level of a lower price level that grab liquidity and above that, and failed to get to the the higher price level within this structure, within this range that the market has created within this range. So right here is still very, very choppy. So are we anticipate the market to still do a little bit of movement. Let's see how Monday goes. Let's see how Tuesday goes. Then we'll determine which direction we want to go with gold. But basically, it remains a very strong bullish momentum. But ideally, with the reversal signal it was showing on a daily time frame right here, it tends more to do a bit of retracement. So until then, if I'm going to do anything on gold, I will expect gold to come into this range before I take a buy. If that is not happening, then I will sit on my hands on gold because it's looking trickish. All right, that is the anticipation on gold for this week, and that is what I'm expecting on all the currency pairs from the XY, Euro USD, GBP Pounds USD, AUD USD, USD CAD, and gold US dollar. This is what I'm expecting on these guys for this week. I hope this works out for you as well. You can analyze yours and you can compare, and I hope this week will be a fantastic one again. Thank you, ladies ladies and gentlemen, for watching. You can like, share the video, comment, and we can meet again. You can comment if I'm not touching your currency pair of choice. You can comment them, then we can look at that in the next video. Thank you very much, and do subscribe and do have a wonderful day ahead of you. Bye for now.